U.S. tariffs came into effect in the early hours of this morning, and so did the Canadian response.
Making America rich again and making America great again, and it's happening, and it will happen rather quickly. There'll be
Trump's tariffs, the start of a trade war. On March 4th, 2025, President Donald Trump made a bold decision that sent shockwaves through the global economy. He announced that the United States would impose a 25% tariff tax on imports from Canada and Mexico. These tariffs primarily targeted steel, aluminum, and energy products, which are essential materials for industries like automobile manufacturing, construction, and technology. Trump justified the move as part of his America First policy, arguing that these tariffs would protect American workers and businesses. He claimed that by making foreign goods more expensive, American companies would be forced to buy more materials from U.S. suppliers instead of relying on imports. He also stated that the tariffs would help reduce America's trade deficit. However, this decision immediately sparked backlash, especially from Canada and Mexico, two of America's closest trading partners. For decades, these three countries have been part of trade agreements like NAFTA, North American Free Trade Agreement, and its replacement, the USMCA, United States-Mexico-Canada Agreement. These agreements allowed goods to move freely across borders with low taxes and minimal restrictions, creating a highly interconnected economy. But with these new tariffs, the entire system was suddenly thrown into chaos. One of the industries hit hardest was automobile manufacturing. Major U.S. car companies like Ford, General Motors, and Tesla rely on Canadian steel and aluminum to build their vehicles. With the new tariffs, the cost of these materials skyrocketed overnight, making it much more expensive to manufacture cars in the United States. As a result, prices for American-made cars could increase, hurting both businesses and consumers. At first, President Trump was confident that the tariffs would benefit the U.S. economy. He reassured the public that trade wars are easy to win and dismissed concerns from critics. His administration believed that Canada and Mexico would eventually accept the tariffs without much resistance. But that did not happen. Instead, Canada responded aggressively. Within hours of Trump's announcement, Canadian Prime Minister Justin Trudeau unveiled a retaliatory plan, slapping billions of dollars in tariffs on U.S. goods. Canadian officials also hinted at more severe actions, including taxing U.S.-bound oil, gas, and electricity exports, a move that could seriously hurt American refineries and consumers. The political and economic fallout from Trump's tariffs was immediate. Many American businesses and farmers, especially those that rely on exporting goods to Canada and Mexico, voiced concerns that they would suffer as a result. Several Republican and Democratic lawmakers urged Trump to reconsider, warning that escalating the trade war could damage the U.S. economy. But Trump did not back down. The March 4th tariffs officially went into effect, triggering one of the biggest trade disputes in North American history. Now, the world is watching closely to see how this economic battle will unfold. Will the U.S. and Canada negotiate a deal, or will tensions escalate even further? Canada's retaliation, a bold and unexpected move. As soon as President Trump's tariffs took effect, Canada struck back hard. Prime Minister Justin Trudeau announced that his government would impose retaliatory tariffs on $107 billion worth of U.S. goods, making it clear that Canada would not be bullied in trade negotiations. The first wave of these tariffs, valued at $30 billion, was implemented immediately. Over the next 3 weeks, Canada planned to expand the list to cover an additional $77 billion worth of American imports. This response was not just about matching Trump's tariffs, it was a strategic move to hit key industries in the U.S. economy. What did Canada target? Trudeau's tariffs specifically targeted products that are crucial to American businesses and consumers. Some of the biggest categories included steel and aluminum, directly affecting U.S. manufacturers; automobile parts and trucks, impacting American car companies and raising vehicle prices; agricultural products, tariffs on corn, soybeans, beef, pork, and dairy could hurt U.S. farmers, many of whom rely on Canadian buyers; consumer goods, products like orange juice, peanut butter, wine, liquor, coffee, clothing, and electronics were also hit, making daily shopping more expensive for Americans. But Canada didn't stop at tariffs. The Trudeau government also considered non-tariff retaliation, which could be even more devastating for the U.S. economy. Canada's secret weapon: energy and natural resources. One of the most alarming threats was Canada's ability to cut or heavily tax energy exports to the United States. Canada supplies the U.S. with nearly half of its imported crude oil, natural gas, and electricity. Ontario Premier Doug Ford warned that if the U.S. continued its aggressive trade policies, Canada could cut off these supplies. Ford stated bluntly, "Half of the nickel you use comes from us. If we cut it off, your production stops." The mere suggestion of an energy export restriction sent shockwaves through the U.S. economy. American refineries panicked, fearing a sharp increase in oil prices. The automotive and tech industries, both of which rely on Canadian raw materials, saw stock prices fall. Electricity companies began to worry about potential power shortages. Trudeau's rapid and aggressive response sent a clear message to Washington: Canada would not be pushed around. But while Canada was fighting back, the impact of the tariffs was already causing major concerns inside the U.S. Economic and market reactions: the U.S. feels the pain. As Trump and Trudeau clashed over trade, businesses, investors, and consumers in both countries felt the impact almost immediately. The Dow Jones and S&P 500 dropped as investors feared an all-out trade war. The Canadian dollar weakened, adding uncertainty to global markets. Some of the hardest-hit stocks were automotive, agriculture, and manufacturing companies, all of which rely on cross-border trade. Automakers warned that rising steel and aluminum costs could force them to lay off workers. Farmers feared losing one of their biggest markets, as Canada was now looking for other trade partners. Retailers and small businesses started seeing increased costs on imported goods, which could lead to higher prices for consumers. Agricultural groups and state governors from farm-heavy states like Iowa, Nebraska, and Wisconsin urged Trump to rethink the tariffs. Farmers feared they would lose billions of dollars if Canada and Mexico stopped buying American crops. A Canadian boycott of U.S. agricultural goods could cripple rural economies in the U.S. Economists predicted that if this trade war continued for more than a year, Canada's GDP could shrink by up to 3%. Some experts warned that the U.S. could also see a slowdown, especially if businesses pulled back on hiring and investment due to uncertainty. Other countries, including the European Union and China, were closely watching the U.S.-Canada conflict. Some European officials suggested increasing trade with Canada to offset losses from the U.S. market. China expressed interest in expanding its imports from Canada, particularly in agriculture and energy. While Trump stood firm on his tariffs, claiming that they would benefit the U.S. in the long run, many experts warned of long-term economic damage. The future of North American trade: what happens next? With both Trump and Trudeau refusing to back down, the U.S.-Canada trade war entered dangerous territory. Possible scenarios. Keycap 1: Trump doubles down. If Trump increases tariffs on more Canadian goods, Canada could escalate its response by further limiting energy exports or increasing taxes on U.S. businesses operating in Canada. The trade war could expand beyond North America, dragging in Europe and China. Keycap 2: Canada takes the next step. If Trudeau restricts oil and electricity exports, U.S. gas prices could skyrocket and American refineries might struggle to operate. This would directly impact American consumers, leading to higher costs at the gas pump and rising electricity bills. Keycap 3: The U.S. business community pushes back. If enough American farmers, manufacturers, and state governments speak out, Trump could be forced to reconsider his trade policy. Lobbyists and trade groups might pressure Congress to step in. Keycap 4: A last-minute deal. While tensions are high, diplomacy is still an option. Some trade experts believe that the U.S. and Canada could negotiate a compromise that reduces tariffs while protecting key industries. If both sides are willing to talk, they could prevent further economic damage. Who will blink first? As of now, both Trump and Trudeau are holding firm. Trump insists that his America First policy is necessary to rebuild U.S. industry. Trudeau argues that Canada will not be bullied into accepting unfair trade policies. But as markets continue to tumble and industries struggle, the big question remains. For now, the trade war between the U.S. and Canada is only heating up, and the world is watching to see what happens next.